With that, I'd love to introduce Bryan Garcia and Susan Young. They're here today to tell us a fascinating story about how Connecticut Green Bank is the first in the country, and it's coming up to their 10th year anniversary, and they've got some tremendous stories to tell. Welcome, Bryan. Thanks for joining us today.
Excellent. All right. Well, Glenn, thank you for that introduction. Ali, thank you for getting us sorted away here. Eleanor, Gavin, I know it takes a village anytime you're putting together organizations that bring like-minded people together to advance an important cause and mission, and certainly conscious capitalism is right there. In reading some of your materials, I really like the notion of how you can use enterprises to deliver good for people, and whether that's business, for-profit, nonprofit, not only serving the mission of the organization, whatever it is, product delivery, but helping make other people's lives better is really, really important. So excited to be here with you all today. And I'll be joined by Susan Young from PosiGen. I will introduce Susan as we move along in some of our remarks here today. So I'm excited to be here with her this afternoon. So before I kind of jump into who the Connecticut Green Bank is, I just want to give you a little bit of some historical context to what led to the creation of the Connecticut Green Bank. It goes back to 2009. Actually, it's a national policy, what was called the American Clean Energy and Securities Act, also known as ACES, the Waxman-Markey bill. For those of you who are policy wonks, you might remember the day when people thought that cap and trade policy was going to be the solution to climate. Well, that was the Waxman-Markey bill that passed the House, but never got moved through the Senate. A component of that bill that had bipartisan support was the creation of something called CEDA, the Clean Energy Development Authority, which was effectively a national climate bank. Think of what I'm about to talk about in the context of the nation, and that will give you a sense for what they wanted to create back then, and they're actually going to be creating today. So it comes full circle. I will come back to that in the end. But when it failed at the national level, the original proponents of the concept of a national climate bank, Reed Hunt from the Coalition for Green Capital, Dan Esty, a professor at Yale, former commissioner of the Department of Energy and Environmental Protection here in Connecticut, ended up taking that national idea and bringing it here to the state of Connecticut. So in July of 2011, Public Act 1180 was passed on a bipartisan basis. A component of that act was the creation of the nation's first green bank, the Connecticut Green Bank. We are a quasi-public agency. I'll talk about that in a second in terms of what we do. But what I want to leave you with is thinking that government in this context of what we do is to try to take some sort of public dollar, taxpayer dollar, and invest it in such a way that it mobilizes multiples of private investment on top of that, while at the same time bringing that public dollar back, not giving it out, but loaning it out and getting it back. So a bit different model when you think about the role of government. Our mission is to confront climate change. So it is front and center. Climate change and confronting it is throughout Connecticut policy, starting with 9828, which was a policy passed in 2008, which established targets for Connecticut in terms of its greenhouse gas reduction targets. And it continues to today in terms of clean energy targets, addressing resiliency and ensuring that our state is more resilient to the impacts of climate. Connecticut, the political environment in Connecticut recognizes that climate change is a problem and that we have to address it. We have to mitigate emissions and we have to become more resilient to the impacts of climate change because it is here and around us. So our mission is to confront it and ensure that while we do that, that we provide all of society a healthier and more prosperous future. So very consistent with the tenets of conscious capitalism, delivering benefits all along. And we do that by increasing and accelerating the flow of private capital. So this isn't about public money, taxpayer money. This is about mobilizing more investment in the economy by getting private investment flowing into markets, specifically markets that energize the green economy. So that is our goal, to not only increase capital into the market, but also accelerate the growth of that investment in the market. With those two things, we're gonna get to a green economy faster. Our vision statement was motivated by three very important people. Maya Angelou on the Pulse of Morning. Maybe Robert, you can kind of chat in a link to Maya Angelou's on the Pulse of Morning. Let's see, Mayor Muriel Bowser from Washington, D.C., who created the DC Green Bank modeled after the state of Connecticut and acknowledged the importance of inclusive prosperity as the rationale as to why a green bank is needed. And Mother Jennifer, who from the Daughters of Sisters Mary of the Immaculate Conception in New Britain, taught us really what our mission was about. It's not about more investment. It's not about more greenhouse gas emission reductions. It is about fundamentally making people's lives better. So she taught us that lesson. So our vision is a planet protected by the love of humanity. You probably wouldn't find love in too many vision statements of government agencies, but it is our belief that if we are going to confront the most important environmental problems of our time, that we have to love each other first before we, in fact, address the problem that we're after. So that is our vision statement. So just digging a little bit deeper on what's a quasi-public. So we are, you could think of us as like a corporation of the state, an organization that uses private sector disciplines to achieve public sector goals. We don't have to go through an annual a process with the Connecticut General Assembly to approve a budget. We have a board of directors that are appointed by the governor and legislative leaders who on an annual basis, we're currently in the process now of devising our comprehensive plan, our targets, our budget for the next fiscal year. So we operate like a business. When we have transactions, we have the board review and approve them and ensure that they are consistent to a plan. So quasi-publics are unique to Connecticut and a few other states who really want to make sure that government in certain functions can operate at the speed of business. And in our context, it is to ensure that capital flows to support the public policy objectives of the state of Connecticut. We focus on financing clean energy. That is a statutory definition in terms of what we can invest in. When you think of clean energy, think of renewable energy, solar, wind, energy efficiency, insulation in buildings, more efficient heating and cooling, windows. Fuel cells are a clean energy resource here in the state of Connecticut because we manufacture them. We're a leading manufacturer of fuel cells in the world. So that is a technology we can finance, and we've done a lot of that. We can also get involved with supporting alternative fuel vehicles and associated infrastructure. It just passed the Connecticut General Assembly, but our scope is being expanded beyond clean energy to include environmental infrastructure. So that brings water, waste and recycling, agriculture, adaptation and resiliency, land conservation, parks and recreation, and other environmental markets into our purview. That is to say that we can apply our green bank model, and I'll show you how it works in a second, to mobilize more private investment in the modernization of this environmental infrastructure. So we will be in a planning cycle for the next year to get that engine up and running. We are currently supported by a number of different sources. Public support comes from a surcharge on electric ratepayer bills. You will see something that says combined public benefit charge on your bill. There are a number of different things in that combined public benefit charge. One of them is the Clean Energy Fund. Some call it the Renewable Energy Investment Fund. That is 1/10 of a penny per kilowatt hour that you consume goes into the Clean Energy Fund. It's about $7 to $10 per household per year, just to give you a sense of how much it is. That aggregates to about $25 million per year. The 26 million is coming down because we're helping more families and businesses be more efficient. So as we help them become more efficient, we get less resources in, which is a good thing. We also receive allowance proceeds from the Regional Greenhouse Gas Initiative, a cap and trade program. We invest those proceeds. We receive 23% of those allowance proceeds. That comes to $3 to $5 million per year that we invest in helping commercial and industrial customers reduce energy costs by deploying renewable energy on their rooftops through a program we called Commercial Property Assessed Clean Energy. In some cases, we receive federal support. We compete a lot for competitive solicitations. We love race to the top policies. In some cases, we receive non-competitive resources. The American Recovery and Reinvestment Act back in the day provided some funding to the Green Bank and our predecessor. We currently have an application into the U.S. Department of Agriculture for a renewable energy savings program, $10 million of financing. So we'll see what happens there. And maybe a national climate bank. I'm going to end with that before I introduce Susan Young. Other support, we have the ability by statute to raise sources of funds through the issuance of bonds. I will talk about our Green Liberty Bond as a source of capital that we've been developing to essentially accelerate our investment in attracting and mobilizing more investment in the green economy. All right. So in terms of our solutions and who we serve, so I like to think of, we provide home solutions and building solutions. So we help families and businesses. We provide them with the capital they need to finance clean energy improvements on their homes or their buildings. And when we do that, I'll show you the next slide, we're helping them directly put money back into their pocket because we know clean energy is cheaper than conventional energy. And we provide them the capital to invest in those improvements. We also are now developing a line of programs around enabling and increasing opportunities for citizens to invest in projects that the Green Bank helps finance. So I will talk about the Green Liberty Bond and our ability to issue bonds, but we are taking the conventional bond model and moving it towards citizens in combination with Wall Street and pension funds and insurance companies. We want citizens to be able to invest too, not just Wall Street. So happy to talk about that. Down below are our three goals as an organization. I think when you think about green banks, as I've mentioned before, we're really trying to take public resources and create multiples of private capital investment on top of that. We really need to scale up our investment to achieve ambitious climate targets that have been set. By doing that, we help strengthen Connecticut's communities by making the benefits of the green economy inclusive and accessible to our various stakeholders. I will talk about these benefits, and there are a number of them. And then lastly is we pursue investment strategies that advance market transformation in green investing, our Green Liberty Bonds specifically, while organizationally, we want to be sustainable, which is to say that we don't want to be reliant on public resources. We want to be reliant on earned revenues and revenue sources that we earn through our various activities. So this is kind of how the Green Bank model works from the perspective of a participating family or business. So here's the household and business solutions. This is what we're doing through our various programs, is we're trying to turn the energy bill that they're currently paying for to deliver them the power they need for their homes and their businesses. And we are going to provide them, we provide them with access to capital that finances clean energy improvements on their homes or buildings that effectively reduces that energy bill. It creates a debt service payment or a loan that they have to pay. In some cases, it's a lease that we'll hear from Susan Young on. And at the end of the day, it creates savings for them. So when you think of economics, this isn't a premium product. We're not trying to sell environmental good at a premium. We're trying to actually make it economically palatable for people to pursue clean energy by delivering them immediately cash flow back into their pocket. And as we do that, we deliver the conscious benefits that we're all after: a cleaner environment, reducing the emission of air pollution and greenhouse gas emissions that contribute to climate change. We make our electric grid more reliable and resilient. And of course, as a result of reducing air pollution, we create healthier citizens. So those are the positive externalities that we're creating by helping deploy more clean energy. So this is what we're after. We do it through a variety of different programs and products. In some cases, we provide incentives. This is the conventional government model of providing somebody with a grant from government that attracts somebody else's money to help that individual or business pursue what we're trying to get them to do, which is to install clean energy. That is the old model. It's a very zero-based budget way of doing public good in the context of government. I would argue that the new model is for those incentives that you see, that arrow going down to the project, for it to also go back to government. So for it to be a two-way arrow. And we're very much doing that today in our programs through what I call performance-based cost recovery. So if we're delivering those social benefits that we're after, then we get paid back for delivering those services. Co-investment, I'm going to give an example of how we co-invest with other private capital lenders in the market. I'll give an example of an anaerobic digester project. On credit support, we partner with other capital providers by giving them a credit enhancement. It could be subordinated debt, it could be a loss reserve, a loan guarantee, and our goal is to get them lending into the market. I've got an example of a program that we run called the Smarty Loan. And then lastly, on warehousing, it could be that we are financing a lot of projects. We're aggregating all those little projects up into multi-million-dollar bundles of similar types of projects that we then sell to investors, either through a bond or any other type of structure whereby we can recover the investment and reinvest it again while passing along that investment to the private sector. And I will give an example of the Green Liberty Bond. So these are all concepts. These are all models for how the Green Bank works. And I'm going to give you an example for how they work in practice. This is the financing of Connecticut's first food waste to energy anaerobic digester. So what you're seeing here is a facility in Southington, Connecticut, Quantum Biopower, that collects food waste. There is a policy that requires large producers of food waste to collect and distribute that food waste to a collection center. And in this case, it would be in Southington. And these anaerobic digesters then take that waste and produce on-site waste to energy. So they produce, obviously, the breakdown of food waste produces anaerobic digester gas, which can be used to produce electricity and waste heat, combined heat and power. There are policies in the state that encourage clean energy of this sort, renewable portfolio standards. Obviously, turning methane into CO2 is much better in terms of greenhouse gas emissions. And this was a $10 million project, first of its kind. The Green Bank provided a 15-year loan to the project at a low interest rate, 2%, at 20% of the capital structure as subordinated debt, which is to say that we would take the first loss on this project while protecting the senior lender, who in this case is People's Bank. So by us getting into the transaction first, it attracted private investment on top of it. And in this case, it is one of our local banks, although we know People's has recently been acquired by M&T Bank. But this is one example for how we would use a co-investment strategy to mobilize private investment in a waste infrastructure project. This is a credit enhancement example. As I was mentioning, Connecticut has very ambitious public policies to encourage clean energy deployment at single-family homes. You could think of making a home more energy efficient, insulation in the walls, more efficient windows, Energy Star heating and cooling systems, solar PV on the rooftop, EV rechargers in the garage, you name it. We've got the Smarty loan where we effectively provide a second loss to our local community banks and credit unions. So what we're trying to do here is to demonstrate to our local financial community that by them providing unsecured loans to families who want to make these upgrades, that these are good investments for them. So we say to them, here's a structure of the program. You provide 5-year, 7-year, 10-year, 12-year term loans. In some cases, banks are providing 50 and 20-year loans, again, all unsecured, at affordable interest rates, that the green bank will provide a second loss and effectively protect you from extreme losses. Now, we all know, we've done our research. We know that people across the country pay for their energy loans. It's Lawrence Berkeley National Labs and a number of other groups have done the research. Loss rates are less than 1%. So what we said to our local lender community is, you take the first 2.5% of losses, and we will take, 1.5% of losses. We will take the next 7.5% of losses on top of your capital. Well, they have to date, this is through June of last year, they have now lent over $80 million, and we've had to pay out $75,000 in losses. So think of that leverage ratio of government helping teach the private sector in this context what the perceived risk is of clean energy investing is very low. So now they're providing their capital to solve problems and public policies that the state believes are important. So that's the Smarty loan. That's a credit enhancement. Let's go to slide 9, and I've got one more, and then I'll introduce Susan. Let's see. Don't mind that sticker there in the center for now. We have through fiscal year 2020, this is through June 30th of last year, we have invested $300 million of public resources, all those things I was talking about before in terms of the Clean Energy Fund and the RGGI allowance proceeds, to mobilize $1.7 billion of private investment on top of that for $2 billion of investment in Connecticut's green economy. Behind that label there is, well, what's the associated jobs created, the direct, indirect, and induced jobs created as a result of that investment. It is over 23,000 job years. That is good. So we all know more investment creates a lot of the things that we're after. So the more we can drive and mobilize investment in the green economy, we're going to see more economic development and jobs as a result. By deploying clean energy, we get the environmental protection goals that we're after, avoiding tons of CO2 emissions, millions of tons of CO2 emissions that contribute to climate change. You see some of the equivalencies there. It's equivalent to 1.7 million passenger vehicles driven for a year, taken off the road. It's a pretty sizable number. Connecticut overall is has fairly low emissions because 50% of our power comes from nuclear, zero emission. So from a CO2 perspective, we're in a much less CO2 per kilowatt hour, but still nonetheless sizable. As more investment flows into the economy, more tax revenue is created for government. So over $90 million of tax revenue have flowed back to the state of Connecticut to invest in their various programs that the state budget is approved for. We've helped more than 55,000 families and businesses reduce the burden of energy costs. That energy chart that I showed you before, we effectively lower their energy costs, putting money back into their pockets so that they can use it for other things that are more important to them. The education, food, healthcare, wealth creation. We want to put their money back in their pocket for other things that are more important rather than spending it on energy. And of course, as we reduce air emissions, particulate matter, we actually improve public health. We work with the EPA to develop a methodology that estimates the associated public health value created by cleaner air from the deployment of clean energy. So all of these things together mean and translate into more investment in the green economy, leads to the conscious capitalism benefits that we're after, all the public good. And for all that, Connecticut was recognized with the Innovation in American Government Awards by the Ash Center at the Kennedy School at Harvard University. This is the Academy Awards for government, and in 2017, Connecticut was honored with that award. So not only were we the first green bank in the country, but we were recognized for sparking the green bank movement in and around the nation. All right. So actually, okay, so behind that little article title there is a map. So there are currently 15 states around the country with green banks. Connecticut had the first state public green bank. Michigan had the first 501c3 green bank. There are 11 other states around the country that are taking action to create a green bank. I just learned today that Maine just passed a policy yesterday to create its green bank. So that's very exciting to see Mainers. And that 12 other states are in the process of exploring green bank creation. So that is all great. And that's all to say that there is a national movement to create green banks. Last year in House Bill number 2, also known as the Move America Forward Act, passed by the House, was a $2 trillion infrastructure bill. A component of that bill was the Clean Energy and Sustainability Accelerator, also known as the National Climate Bank, which proposed setting aside $20 billion to lend to state and local governments to replicate what Connecticut is doing across the country. It moves beyond mitigation and includes adaptation and resiliency. The American Jobs Plan proposed by President Biden, the $2.3 trillion, included the Clean Energy and Sustainability Accelerator at $27 billion. When that was revised to bring bipartisan support of the president's jobs plan to $1.7 billion, the accelerator continued to be included in the bill. There is growing bipartisan support of the accelerator because you can see fundamentally this is about moving private investment. So that is great. There's no telling right now as we hear all the news about are we moving towards reconciliation or a bipartisan bill on infrastructure. I'm optimistic that the accelerator is going to be passed. The Senate is moving with its version of the bill, coming back full circle to Senator Markey now. I mentioned earlier he was Congressman Markey in proposing the American Clean Energy and Securities Act. He worked with then Congressman Van Hollen, who introduced the Clean Energy Development Authority back in 2009. Today, they have partnered in the Senate to release the National Green Bank Act, which proposes a $100 billion national climate bank. So I anticipate somewhere between $20 to $100 billion will be set aside as part of infrastructure investment to decarbonize and modernize our nation's infrastructure while making it more resilient to the impacts of climate by using a model that we pioneered here in Connecticut 10 years ago, starting July 1st of 2011. So that is where we are. That is the story of the Connecticut Green Bank. As I mentioned earlier, our scope has now been expanded to include environmental infrastructure. We are excited by that. But that is all to say that we have built partnerships along the way. And one of the big partnerships we have is with a company called PosiGen. We recognized back in 2014, we took a look at the data. We had in Connecticut been attracting and mobilizing private investment in residential solar in our state. But when we asked ourselves the question of, well, who is benefiting from that investment? And we worked with UConn and the Economic Development Center there. When we looked at income, it was clear that we were leaving low to moderate income families behind. And at that December 2014 board meeting, our board said, the green bank model isn't successful unless we are mobilizing more private investment in areas of the market that need it the most. So we ended up doing a lot of different things, but one of the main things we did was we issued a request for proposals, and we found this great company out of New Orleans, Louisiana, called PosiGen. We brought them up here to Connecticut. We surrounded them with investment so that they can go out and do what Susan Young, my partner here, is going to tell you more about. So Susan.
Great. Thank you so much for that introduction, Bryan. Thanks, everyone. It really is an honor to be here and just to speak about the impact that Connecticut Green Bank and working with the Solar for All program has just been instrumental in working with families and helping families, put the money back into the pocket, as Bryan had mentioned previously. So where do I begin? A home is the most expensive investment for just about any family. And when families are purchasing homes, usually the debt to income ratio is about 40%, somewhere around there. When it comes to utility, that is definitely not the case because families are paying so much of their income towards maintaining their home, keeping the lights on, keeping the home comfortable, whether it's in the summertime being cool or in the wintertime being warm. So just to give you a little bit of background about my story. So I don't know if PosiGen found me or I found PosiGen. I don't know. It's a little bit of both. But PosiGen came to town at end of 2014, early 2015. I actually heard about the program after being after looking into other solar company and realized that I wasn't able or wouldn't be able to afford solar because the requirement at that time was a substantial down payment in the amount of $30,000. Once I heard about the program and the impact it could have in lowering my electric cost, I actually decided to look more into it. The program actually, the Solar for All program, as our CEO nicely, I'll quote him right here, and put together, it is to make a positive financial impact in the lives of families we serve. The program is called Solar for All because it's solar for all homeowners. And I think Bryan probably have heard me say it 100 times. It's not solar for the rich. It's not solar for the high earners. It's solar for everyone. When Connecticut Green Bank had invited us to be here in Connecticut and to promote this program, it was in fact because many LMI families were just being left out of the solar movement. Solar was only then at that time for a small minority who were able to afford it, the substantial down payment, and had the high credit or whatever else was being offered or required at that point. So the PosiGen or impact or commitment is to make a positive financial impact to communities we serve. So our first office actually opened up in Bridgeport, Connecticut, little Bridgeport. And we started with the Solar for All in Bridgeport because when when Green Bank had done, their consensus and trying to find out where are the families we want to start with, it wasn't just Bridgeport. We also actually have done 11 Solar for All programs so far, covering New Haven and many other towns, Hamden and Middletown, and I don't want to name them all out, but we are now down at our number 11, which is the city of Norwalk. So not only are we helping, to make a positive impact in the community that we serve, but we're creating jobs, and many of the people that we hire for PosiGen are customers. And I will talk about my story some more because once I reached out to PosiGen, and I met with the representative, and they go over, this is a program. There was no income or credit required, and you're going to save money. There's a first year saving guarantee. A lot of that information had sounded at that point a little bit too good to be true because of what I've heard previously. But I decided to look into it. And once I did, I have to say it's when I got my first electric bill from the utility company was so low, I reached out to PosiGen, and I pretty much told them that they got to hire me because I do want to, inform and let other families know that there is help out there. So the impact is definitely instrumental, because families that are after purchasing the home, it's all about maintaining the home. And one of the big thing about maintaining the home, it's keeping the utility costs low enough so that they will be able to remain in the home and pay their mortgage. One of the things that we do notice here also too, many families, they will pay the electric bill before they even buy food, and that is something really that just drives us to just a new level of consciousness, because these families, they have to keep the light on, they have to keep that emergency cell phone charge, they have to keep the food in the refrigerator. So we're coming across many families that will go out of their way and pay the utility bill with the whatever funds that they have. And then, sadly, many of those families do end up going to food pantries and, looking for other resources in terms of maintaining or, sustaining their living arrangement. So we not only, help families, but like I said, we create jobs, and, it's all about saving the environment. Okay, so 61% of our employees in Connecticut, you know, of our employees in Connecticut, and we have 59% of our employees. So we hire so many in the low income LMI bracket. So it's not just for impacting the lives of families by reaching out to them and offering this program that's available to everyone, but even in our hiring, we're out there saying, if you do need, to work and you want to work in this field, in the renewable energy field, this is a place for you to be. So we I would say, not only talk the talk, we walk it as well. Okay, so this shows some of the impact that we have on our graph here. It shows what's happening in Connecticut. And just earlier today, I was told we're closer to 17,000 customers now. So this is a little bit outdated. On average, we're saving families $700 the first year. And, I just have to say that this is a very conservative figure because some families, are definitely over the $700 range. So the energy efficiency, it's an upgrade, but it's with every single customer. So we not only just put the solar on the roof, because it's a wonderful thing to have solar, to be able to make your own energy, but then you have to also save the energy, because for many of our homes in Connecticut that are, historic buildings, you don't want to have just your energy leaving through the windows and doors and wherever else. You got to seal all those cracks and everything. So PosiGen coming out and saying, okay, we're not only going to save you money, we're going to make sure that you make the energy and you also save the energy that you make. And of course, it's our program, it's no money down, no credit required, and there's no escalator also for a fixed payment. So many of the families that have reached out to us, they are very thankful of the program. And if I may just even share, recently, as today, I got a call from someone who wanted to inquire about his mom, and basically saying, well, his mom had not received a bill, but her home, she's getting the benefits and all of that. We do energy efficiency as a part of the program. So the customers, it's I mean, there is so much good in what I see from day to day. And even on this street, this is actually a street in Bridgeport, one of our homeowners, his home, the third one actually to the right, he was the first on his street to talk about the Solar for All program. And he saw the program, he got involved, and he got the panels installed. At first, his neighbors thought, he was a little bit crazy. For others, for even myself, my neighbors thought I was rich because at that point, only if you had, a substantial amount of money, you could go solar. But with the Solar for All program, knowing it's for everyone. Now, on this street in Bridgeport, I mean, it's pretty much aligned with panels, so much that the utility company had to come out and upgrade their their transformer. And of course they don't like that a lot, but that's another story. So the Solar for All program, really, it's about bottom line, it's helping families, families that otherwise would not be able to maybe take a vacation, maybe, to buy the little extra thing that they would need for, back to school supplies or whatever it is. We're having many families just reach out and say, okay, I wasn't able to do that, but now I can. This is another one of our customers here, Chad and his son, also just definitely recipient of the Solar for All program. So, the Solar for All program, we do have a website, which is www.posigen.com, or even www.solarforallconnecticut spelled out.com. Will be able to access us through that. Okay.
Bravo, Susan, and thank you, Bryan, for a wonderful wrap up. There's so much good storytelling in there, and it really supports a lot of things we stand for around, racial equity and social equity and so on. So I'm thrilled to hear the story today. I know we don't have a lot of time left, and so I will open it up to the group, and maybe Eleanor, you've been managing the chat function there. You could probably dig out a few that are worthy of the few minutes we have left.
How about talking about the company culture, Glenn? People were curious about what it's like inside these companies to work for them culture-wise.
So the Connecticut Green Bank is definitely a very mission-driven culture. You probably saw that through the slides. If you look at our logo, we went through an exercise as part of creating our brand and our logo. So the whole Red Rock branding, right, Glenn? We went through an exercise back in 2016. And one of the things our consultant asked our staff was, what do you think about when you come to work? What's the first thing you think about? And, as the leader of the Green Bank, I was interested in their response. And, she asked them to bring a picture of what it was. And people brought, chemical catalysts. People brought pictures of bald eagles. People brought pictures of superheroes. So for me, it's great to know that my people feel like we are doing something that is catalytic and that they are superheroes, right? It's my job as a CEO to provide them the resources they need to be able to deliver more for our mission and our public purpose, and feel a part of something special in them creating it. So our logo, actually, when I look at our logo, what I see are, if you've ever seen the kind of a Hall of the Superheroes kind of graphic that shows all the superheroes coming out at you, to me, that is what our logo represents. It's the culture of our organization of superheroes. They all have very unique skill sets, and they are all attacking the problem in very different and unique ways. So I think that's the culture.
Cool. Susan, you want to add anything to that about company culture?
Okay, definitely. PosiGen, we have a love for humanity. And and that is why even the Solar for All program was created. It's not to leave anyone. It's Bryan had actually, I piggyback on his word is, inclusive prosperity many times, but it is what it is. And that is reaching out for the families that have originally been left out. But the culture in the workplace also reflects the population that we serve. Everyone.
Hey, Glenn, can I ask a question?
Please, Chris.
So Bryan and Susan, so refreshing to hear so many positive things, and helping so many people. I get discouraged, but this is encouraging me. We've worked so hard over the last 30 years reserving our renewable energy dollars, and the state legislatures, I'll say it, steal the money. I don't know how many times you've gotten your money stolen out of your budget. Now there's all kinds of money up there. Hopefully it won't happen in the future, but we work so hard. Businesses work so hard. Susan, everybody's working so hard. How can we prevent that from happening in the future? Can you tell us that you've gotten your budget taken 5-6 times? Is that okay to say, or you're not allowed to talk about it, or lots of times that money has been taken, and for the general fund, And what's important is our environment and renewable energy. Imagine how far along we might be if some of these monies wasn't taken. And then the other question is, are they on board now? Are they on board? I know they change all the time up there, but they're an important part of the equation to make sure that our energy future marches on in Connecticut without stopping, taking, taxing, stopping, you know what I mean? If you don't mind, just touching on some of that.
Yeah, so thank you for the question. So, as I was describing before, the creation of our brand and getting that point to having the organization part of the, everyone in it, disruptions like that. In 2017, more than 50% of those public revenues were diverted, swept is the term of art, from the Green Bank to the General Assembly to fill a budget gap. That had a really significant impact on the culture. So, when you raised the culture question, I very much gave it a pre-sweep culture. I think our staff, as a result of that sweep, the culture's changed a little bit, meaning, these are individuals who have given their lives to a purpose. And when somebody can do what was done, it has an adverse impact on the culture. So I would never ignore that. And I know it's there. So what did we do? We recognized that we needed to make ourselves more resilient to the impacts of those external effects. I'm about to present to our board next Friday how we've been implementing our sustainability plan, which after the October sweeps, December, 2 months later, we had a plan in place to figure out how we were going to respond to a greater than 50% revenue hit. We responded in a number of ways, but the big one was we had to develop our capacity to issue bonds. So, the legislature is going to ebb and flow in these cycles. They've done it every 5 years. It's cyclical. So you have to anticipate that it's coming again. The question becomes, can you be more resilient this time to those sorts of effects? And I would argue that today we're more resilient to that because we can issue bonds. And we can issue bonds that are protected based on the cash flows that are coming from those public revenues. So if you're looking to redirect public proceeds, you are now redirecting investments from citizens who have put their money into investments in their communities. So it's a challenge. In hearing the legislative leaders at the time talk about taking away taxpayer money from the elderly, the young, and the disabled from the Green Bank, I get it. There's no argument against that. But what Mother Jennifer taught us, as I explained earlier, in terms of inclusive prosperity and our vision, is that what we effectively do is make people's lives better. She told me in January of that year, literally 3 months after we got swept, she's like, Bryan, you do so much more beyond that $2 million of capital you mobilized for our 1 megawatt fuel cell farm here at the Daughters of Mary. Because I'm able to save on my energy bill, I can increase my summer programs for the young and the elderly. I can increase my housing programs for the battered and the poor. So that is what we do. We don't do all those other output things. We make people's lives better. And if we can tell the story of how making people's lives better by deploying clean energy, then I think we've built a bigger shield in the future when they start to look at.
Well, thanks for sharing honestly like that. And, and like I said, maybe our missions would be even further along if it wasn't swept. What a nice name for stolen. So why not find a state legislature now They have more money than God up there in Hartford, that this cannot be done. Put a bill together that this cannot be done in future years. Because I can't imagine if 50% of our budget got swept, we'd be out of business and our mission would be crippled. So why not find somebody? Because you never know who's in power, what their agendas are, how they spend money, right? So I think that's a fair thing that exists. This is for the environment, climate change. You know, come on, this is important stuff. You can't stop and start this stuff. The glaciers aren't going to stop melting because they want to take some food for, take some money somewheres. So anyways, thank you for sharing.
Thank you for the question.
Just as a point of interest, I no longer have Save the Sound license plates because that money was swept.
Yeah.
And it goes into the general fund. Remember when the lottery was supposed to fund education?
I know.
Maybe
it's wrong.
not. So it's up to us. And when these bills are in the hopper and they're widely publicized, and Bryan's cut was certainly hotly contested. It's up to all of us to make our voices heard and to let our legislators know that it isn't our priority to cut those services and programs that are for the greater good and for the environment.
We can try.
Yep, no point in complaining after it's done. We need to be more active.
Yep. But good missions, good stuff going on. So appreciate all the hard work from Susan and Bryan and your department and your company.
Susan could sell me anything.
It's a good place to leave it. Really enjoyed, Bryan, your story and unfolding that so with such eloquence. And Susan, the way you were recruited, I think is hysterical. And it talks to the culture and the place that people, and the idea that we talk about a lot is people want work that's meaningful and fulfilling. And so I like your journey because it of course leans into that. So, which is probably an unexpected side, byproduct of this whole engagement. But here we are again, it's 4 o'clock, and thank you, Chris, for your questions, and Bryan for your time, and Susan with your generosity and big ideas. And we're so lucky to have you, operating with such diligence at the speed of business. I love that, because as a quasi-government organization, there's a little bit of heritage that you need to sort of shake off in terms of government departments. So thank you again for everyone showing up. Great conversation as always, and we look forward to seeing you again here in a couple of weeks.